Overall, I think we are relatively optimistic. We are, I mean, what we have seen in this quarter is more a secular, I mean, not a secular trend, it's more a seasonal weakness. So barring one or two sectors
And this
like...
optimism is coming on the back of what?
No, it's looking at our pipeline, and we are not seeing any specific industry-specific trend, or we are not seeing cut down in projects or anything. Obviously, our clients continue to be cautious in the sense that they are also trying to white out on how the new US regime will look at, whether there will be any policies and so on. So to that extent, some of those cautiousness in terms of taking decisions, particularly when it involves large outsourcing projects, will probably continue for some time. But if we look at our pipeline, if we look at some of the other areas we are looking at, we are not seeing any client-specific trends of slowdown or anything. So that gives us the optimism and confidence that some of the declines we have seen across board this quarter will probably reverse itself in the coming quarter.
Sure. Ranga, there's been a margin expansion this quarter, but I think the pressure on pricing continues. So take us through, the trends there, and what levers do you have to ensure this margin expansion sort of continues?
Sure. I think, as I said earlier, this particular quarter, operating margin has expanded. It's at 25.1. Net margin has expanded to 21.5. Operating cash flow is 100% of profits, PAT. So I think if you look at the first 9 months of this year, because quarter to quarter, there are seasonalities. So if you look at the first 9 months of this year and compare with the last 9 months of last year, operating margin has been steady at 24.7, despite the drop in the revenue growth as compared to last year, which essentially means that we are able to, and there was 1.7% pricing decline year on year, which essentially means that despite that pricing decline of 1.7, using these levers, we are able to hold the operating margin successfully so far this year. Now, in October, we had given the margin band of 24 to 25 for this year. We are likely to be at the higher end of that band. Now, coming to the levers, there are, as we have been saying for the last couple of quarters, there are 4 levers that we continue to optimize, which is the utilization. Utilization, as Vishal was saying, for Q3 has been healthy. And for the last 7 quarters, consistently utilization has been above 80%. Better talent planning, better cycle time management and things like that. Second is the subcontractor expenses. If you recollect, it used to be 6.3% of revenue. Same quarter last year. It has come down to 5.6 this particular quarter. Now, at the same time, there are other levers like on-site mix. It is 29.8, and there is, we were working towards how to gradually address that and bring it down. Now, the cost optimization that we undertake in this company is not in the areas that will hurt growth. We don't want to optimize in areas like sales, in areas like where you have to invest for future growth. These are the areas where through operational efficiencies, subcontractor management and utilization is a classic example.
All right, the Infi top brass,